There's a very, very small buyer pool in that asset class, and it's going to take a little more time. Load limits, again, if you're doing the conventional, you got 10 properties, you can't go over that. Multifamily, as long as the deal supports itself, they're not going to limit you. Talked about appreciation a little bit, market versus income. There is a little bit of market influence here depending on where cap rates are, and that's a function of interest rates at the time typically. But cap rates don't fluctuate a whole heck of a lot year over year. Do rent increase affect value in a single family? They don't, because it just affects what goes in your pocketbook. Where, on the 20 unit that we bought last year, we increased our rents and raised the value by $300,000 in 6 months. I can't do that on my single family house portfolio, but I can do that on my apartment building. Management, you can self-manage a 1 to 4 unit. You can self-manage a multifamily, but it gets a lot harder. And bringing on a property manager that knows what they're doing is worth their weight in gold. Operating efficiency, single families are low. You got maintenance spread across multiple properties, where when you look at multifamily, you're in one area, you have economies of scale, shared systems, everything just is a little bit easier to operate when you're looking at a multifamily unit. Single family tenant demographics, they're going to stay a little bit longer typically. Sometimes you got families in there, or maybe, a couple roommates that have been together for a while. On your multifamily side, you're going to have a lot more turnover. That's a lot more opportunity for rent growth. It's also a lot of opportunity for cost as turnover cost. Vacancy, this is huge. This is one thing I learned my first property I bought. If I have one property and they move out, when my tenant moves out, I'm 100% vacant. If I got a 40 unit property, one tenant vacates, I am 2.5% vacant. So that's something to think about. Your tenancy and your vacancy risk is very different profile for multifamily versus single family. We can go through a few of these more. Insurance cost. It's less efficient for single family portfolio versus a multifamily. Your per unit cost is much lower for a multifamily versus having 10 to 20 properties across town. Utility billing, we talked about RUBS a little bit. I really like to pull this lever when we're looking at underwriting. How can we get tenants to pay for RUBS? And that will increase our net operating income. Renovation, single families are easier because you just go pop in and out, done. Renovation on multifamily, you can do them one at a time. Sometimes it's disruptive to your other tenants, so it's not always as easy. Government regulations, we'll kind of skip that. Kansas is pretty chill. Depreciation, so 27 and a half years on single family. Multifamily cost segregation is a bigger deal. You can pull that lever and depreciate a lot more faster. And you also get 35 years or 37 years, I forget. It's a longer depreciation timeline on what's left. Partnerships, a lot easier. JV to syndication, limited partner, general partner models on multifamily versus single family houses. A little bit higher barrier to entry on multifamily. That's why they sit longer, and that's why it takes a little more time to get those properties bought and sold. You're going to get a little better cash flow per door on a single family. You'll have fewer units because you're going to tie up your capital, where on a multifamily, you get a little lower per door, but you can buy more units, a little easier to buy.